All right, now turning back to the major averages, joining us now is Rebecca Walser, president of Walser Health Management, and big day for the major indexes. Rebecca, what are your biggest takeaways from today's activity?
Well, obviously, I'm really happy, Ken, but I don't want to get the cart before the horse here, because I actually think we're still in for a slew of volatility. You know, you can see how shallow a recovery is when you get bad news and the market starts to crash. And as you mentioned earlier, Black Friday was sort of the beginning of this last volatile cycle. And as you saw last week, you know, we were to the positive on Monday, recovering from Black Friday, and then we were down on Tuesday and Wednesday because of Jerome Powell mentioning before the Senate that the inflation was no longer potentially transitory. And so we had 2 bad days, then we recovered on Thursday, then we went back down on Friday, now we're recovering again on Monday. So you can see the kind of ping pong that we're playing. Well, I think what's good news, Ken, is that the world has maybe realized that they don't need to overreact every single time a new variant comes out. We should probably give ourselves time to digest data. I know that there are countries, Austria specifically in Europe, that are shutting down, locking down again. And, you know, yet we have the South African doctor who discovered it saying that the symptoms are very mild, that there's not even any hospitalizations at the time she made that statement in South Africa. So I think that it's good news that the market is saying, okay, maybe we overreacted on this new variant, but we need to see that more often and not be so fickle as a market. And that's hard because the recovery has been shallow so far, Ken.
Now, speaking on the Omicron variant, you were talking about how it went up, it went down, it went up. Are we still going to see that? Because although it seems like you're saying that folks need to ingest the data first, a lot of people aren't built that way. So what do you think the investor sentiment is going into and throughout the month?
Yeah, we're emotional investors, you know, because it's something called our money. And so we're sort of, you know, we're sort of care about our money. You know, what I think can happen with the variant is it can still affect international travel, which then will pressure domestic travel. It will continue to pressure the markets. The markets don't like uncertainty, and anything that's new and is uncertain, we react negatively to initially, and then we become defensive. And you can see that we're sort of unwinding that from last week still. But I do think if we hear Europe locking down, if we do start to see bad data, then it's not going to be good for the markets, Ken. We are in a really unusual position where we have some strong economic fundamentals, but most of that is still being propped up with the Federal Reserve, support of $120 billion a month. We know now that we're talking next week at the FOMC meeting about tapering faster, so that will conclude in March instead of next June, and that will put a lot more pressure on the markets to go it alone. We have a lot of resilience and reliance is the right word I'm looking for on the Fed right now and Fed policy.
Now, airlines were among the biggest winners today. They've been losers a few times in the last week. So do you anticipate the travel and leisure stocks to find continued success in December, or are they a riskier play?
You know, I'd say right now, Ken, travel and luxury is riskier only because, and I just literally read a case study of a Norwegian cruise where everybody on the cruise was vaccinated and they still came down with a COVID outbreak. So I think as we start to see stories like that we're starting to worry still about travel more. And the second that the market starts to worry about the travel being a reality and realizable, the more that people are going to pull back and say, let me just wait and see. And we don't want that wait and see, because that's when people don't actually invest or buy the dip, because they still think, well, maybe the worst is not yet to come. It is yet to come. So, you know, travel is so intertwined, you know, Ken, with the virus that unless we get some really positive news like, oh, it just disappeared on us and there's no impact, I don't think we're going to see nothing but positive news on the travel stocks, unfortunately.
All right. And when it comes to volatility, are we going to continue to see this throughout the month of December? And if so, why or why not?
Yeah, so we are definitely going to, in my opinion, continue to see volatility, and that is because we're in a transitionary period, Ken. We are looking next week for more guidance from the Fed at their meeting next week on the 14th and 15th, and we're going to find out, okay, how fast are we going to taper? Are we going to do it as fast as March? And the bigger concern, Ken, besides the tapering, obviously that $120 billion of support every month is something that the market has sort of counted on and really enjoyed, but beyond the taper is the interest rate increases, and if we taper all the way by March, because they want the taper to finish before we can even look at interest rate increases on the table. And if the Fed starts talking rate increases, the market's not going to react too positively to that. We've had a very accommodative policy since the coronavirus, and the market has enjoyed that. And now we have to really see how strong this market is without that support or that support being pulled back. So we're still in transition, and anytime you're in transition, you potentially could have reversion to the mean as the Fed starts to take away some of that support.
All right, so it was just last week that Fed Chair Jerome Powell discussed accelerating the timetable for the tapering of monthly bond purchases. Now, in your opinion, how must the Fed proceed with variables in the market like the Omicron variant and, I don't know, inflation?
This is their problem, Ken. You know, they really, I don't want to say they backed themselves in their corner, but they really took a strong stance initially saying that inflation is transitory. And now we're starting to see data over the longer term. We're getting obviously over a year now, and we're starting to see real year over year increases in core CPI, over 5% year over year over core CPI. And as you know, Ken, and our watchers know, core CPI does not include food or energy. So when you include food and energy, you've got 20 to 30% in some sectors of increases simply because of the supply chain issues, because of the virus, and it is a problem. So this Fed has a very delicate road to walk. This is the most balanced act they have to perform of all of their jobs, is how to stimulate to keep away a depression that would take us, you know, probably decades to recover from, yet not overstimulate so that when they start to pull back, the market starts to really go crazy. And so it's a very difficult task for them, and I would tell people to expect volatility in December and in January. Absolutely.
All right. So on that sentiment, what advice do you have for the newer investor in navigating the market during the holiday season? If newer investor you're watching, good luck. It has been a wild ride. But what advice do you have for them navigating the market during the holiday season?
It's a great question, Ken. A lot of people, and maybe not new investors, but a lot of our traditional investors, long-term investors, know that there's a Santa Claus effect in December. We might not get that this year because of the labor market problems we have. Obviously, we saw in November a bad worst jobs report of this administration thus far, and not even the seasonal employment of, you know, the Christmas hires really helped. We missed our jobs report by 300,000 plus last Friday. So, you know, I would just say if you're expecting the Santa Claus effect, maybe think more like 2018. We were going through a taper, and remember that Christmas Eve, that was not fun for a half a day of a market. We lost 1,000 points. So I'm just wanting people to be realistic in this time where we are going through still a global crisis that is not yet finished rearing its ugly head, and now we're starting to taper. Be prepared. We are looking at volatility going through these things. Absolutely.
All right, Rebecca Walser, president of Walser Wealth Management. Rebecca, absolute joy. Thank you so much for giving us your insight. Be prepared this holiday season. Okay, so coming up.